All right, ladies and gentlemen, this is your ultimate guide. I like to call this the Michael Saylor method for retail. This is something that I have been doing for a very long time, and it is something that allows me to gain extra exposure into the market. If I'm bullish, if I'm bearish, but mostly I just do this when I'm bullish, and I want to increase my exposure to things like Bitcoin and Ethereum, even if I don't have any more dry powder sitting on the sideline. This is the exact same strategy that Michael Saylor uses, and you can use this too as retail. This is incredibly powerful. It's a super informative video. I suggest that you watch it all the way to the end. I will show you exactly how you can turn 1 BTC into something like 1.6 BTC without having any extra capital on hand at the moment to do that. This is super, super powerful, and when used correctly and when you take into consideration all of the things that you need to in order to make sure that you're safe and you don't get liquidated, I'm going to go into all that in this video. If you're excited for that, make sure you like the video, share this video with all of your friends, let them know how to gain extra exposure in the market. This would be incredibly beneficial for everyone to learn. Like the video, guys. Help me out. I'm giving you a lot of alpha here. It would be appreciated if you share with people. This video in particular is going to be something that really can help you get ahead in the market and increase your stack of BTC, Ethereum, and other valuable assets that are available on Aave. So let's talk about Aave for a second. Aave is a borrowing and lending platform that allows you to over collateralize a position, take out a loan, and then do whatever you want with that, right? And so I will show you quickly here the Aave platform and what I've done here. So just in order to make an example on this, let's go ahead and I'll just do this as I'm talking. Let's go ahead. I put in a test wallet, 1.5 ETH, and I'm here on Aave, and you can see here on the left-hand side, there's assets to supply. So this is what, once you connect your wallet, it'll look, and these are all the assets here on the left-hand side that you can deposit, and they also show you, you can just collect APY too on this. So if I deposit ETH, I'm getting 1.25% APY. If I do USDC, I'm getting 3%. You can get 5% APY on your stablecoin. If all you do is deposit Tether, leave it in there, you're gonna get 5% a year interest just for leaving it in Aave. Look at GUSD, I don't know what that is. 15% a year on this. I guess is this Gemini stablecoin? I didn't even know. But 15% crazy. Now this on the right-hand side are the different assets that you can borrow. Now, they also have different markets. So they've got Ethereum market, they've got Base, Arbitrum, Avalanche, Polygon, Metis, things like that, and different versions as well. For right now, we're using version 2 of the Ethereum market. And on the right-hand side, these are all the different assets that you can borrow once you collateralize these assets on the left-hand side. Now, they're showing you on the right-hand side over here the different interest rates you're paying for your loans. So you can see that if you want to borrow a stablecoin, USDT right now, you're paying 7.25% on a variable APY, or if you want to get guaranteed APY, because this variable can fluctuate, and at times it goes very high, very low. You can get as, it's high at 16.9% right now. If you want to get guaranteed stable interest rate, that's very, very high. Historically, if you look at details, you can see that it's usually much, much lower. So you can see that there's been some fluctuations in short periods of time, but the algorithm and the arbitrage usually works out to where people aren't borrowing at high interest rates. And so that generally comes back down. But you can see generally, for most of the year, except for these periods of high volatility, for most of the year, this is only 1 month, but let's look at 1 year data. You can see at 1 year, typically the APY it's taking a while, is usually much, much lower. It's usually around 2-3%. And so that's kind of what you're looking at for most of the year. So let's go back, since it's taking forever. I'm going to supply 1 ETH right now just so we can show you guys exactly a strategy that I'll talk about in just a second here. So we're going to supply this. Go ahead and confirm. And now it's taking 1 ETH from my wallet. It's going to trade it for a ETH or Aave derivative ETH. And I can also go do things with that in the market too, different DeFi protocols, but I'm not going to get into that right now. Right now, I want to teach you how to increase exposure. So if I only had 1 ETH, now we'll show you how we can actually do more. But let me go into some other things on this guide here. So going long on Aave. So here's some simple steps. Deposit tokens into Aave that can serve as collateral for a loan. We just did that. We just said ETH. Borrow USDC or USDT against that. So come back over here. And so what I'm going to do is I've got, my balance is $1,669. And that's how much collateral I have, $1,669. So let's say I go over here and I'm going to borrow some USDT right now because I want to, or maybe I'll borrow USDC because it's cheaper, right? So I can come over here, borrow this, and I'm going to do variable rates. And so I can borrow, it says available max to borrow is 1.36. That's the max that you can borrow at which Aave looks at the loan to value ratio. That's how much you're loaning compared to the value of your collateral. But in this case, I'm just going to borrow 1,000 USDC, and you can see that it gives me my health factor. Now, this is 1.43. It's a little bit lower than I like to hang out at usually, because if it gets below 1, you start to get liquidated, and it'll start to sell off some of your assets in order to repay your loan, and that's not a good thing. So we'll teach you how to prevent that as well. I acknowledge the risk involved. I'm going to borrow USDC, sign the transaction, and now I'm going to borrow $1,000. So now I've had my 1 ETH as collateral. I'm borrowing $1,000, and then I'll show you what I can do with that and what's called a looping strategy. But let's get back into this. So how to long? I just did this. I traded in I'll show you that. So borrowing USDC, USDT, I did that, and now if you want to go long, you could trade the USDC or USDT for the coin that you expect to go higher. So this is how you can kind of leverage into something, right? You're using a bit of leverage, you're borrowing some money, and if you think that Shiba or you think that whatever, I now have in my wallet, I have added to my wallet, and you can see I've got 1,000 USDC in my wallet, and now I can do whatever I want with that, right? I can, so now I can go buy whatever token I want to, and then when it increases, I can pay back the loan and take my profits. The same is true on shorting. So it's just the opposite thing. Deposit tokens in Aave that can serve as collateral. Now remember, you only have these ones that you can supply as collateral, and you can go look and explore around more on the different markets and the different, there's going to be things on Arbitrum and Avalanche and Phantom, so different tokens there that you can use as collateral as well. You're gonna borrow the token that you want to short, trade the borrowed coins for USDC, USDT, unwind the short position by trading from USDC, USDT back into the borrowed coin. Make sure to acquire enough coins to cover the borrowed amount, plus the interest accrued during that time that your loan was active. Repay the loan, thus completing the operation. Now here's where I like to do this. This is I think the most valuable and interesting way to increase exposure. However, it does come with risk. So the strategy is deposit BTC or ETH. In this case, we deposited BTC, but you can see that wrapped Bitcoin is on here, right? And so I like to increase my exposure to Bitcoin, and so I often will do wrapped Bitcoin or ETH on this platform. But in this example, an example that I'm going to walk through toward the end here, which shows you exactly how to increase your stats, increase your stack of sats in Bitcoin or your ETH as well. So borrow USDT or USDC against your Bitcoin. Use a borrowed stablecoin to buy more Bitcoin. Resupply the Bitcoin, and if required, borrow more USDT against your collateral. So let me show you how that works. So right now you can see that I borrowed $1,000, and my health factor is 1.43. And you can see in my assets to supply, I still have $1,000 here that I can resupply. So I'm going to go ahead and do that and show you that if I resupply, right now my health factor is 1.43. If I resupply this $1,000 I just borrowed, my health factor goes up to 2.3. So that means that I'm now in a healthier state, that I don't have to worry so much about the risk of liquidation if the market corrects and that goes down. But now I'm going to show you after this, the key here is now I can go borrow even more ETH. I've borrowed stablecoin. So stablecoin doesn't fluctuate, hopefully, with the volatility in the market. But we want the volatility in the coins that we're actually buying more of. So scratch that. What I'm going to do instead is I'm actually going to swap. So I want to swap this, and you can do actually I could do this on here too, right? So I could actually supply. I can either go right now. I can either go to a DEX and make my trade, or I could supply the USDC and then switch it. If you see here, you can switch. So I can trade my ETH to whatever I want, right? And so what should we do here? Right here, what we'll do is we'll supply this, the max amount. supply USDC. I'll show you how you can do everything in the app itself. So let's supply this. But really what I want to do here is I don't want to supply the USDC. I want to increase my exposure to ETH in this case, right? And in the example I'm going to give you a second is using Bitcoin. You would just use wrap Bitcoin in this instance. But what I want to do here is I want my collateral to be in the form of ETH. And I want what I borrow to be in the form of stable, so that the borrowed amount I have to pay. So if ETH goes up in value in this case, all I have to do is pay back that stable coin value that I borrowed. In this case, so far, it's $1,000. So here you go. So now I'm going to switch this because I should have done this in the first place. I should have actually done this, and actually I want to switch this to ETH or wrapped ETH in this it's the same thing. You can see that it doesn't affect my health factor at all. So I'm going to do the maximum amount. I'm going to switch it over to ETH, and then I'm going to have ETH, and now I have more ETH than when I started, right? Remember, I only started with 1 ETH, and now once I do this, I will have an additional 0.596 ETH, and I still only have my $1,000 loan that I have to pay off. So when that appreciates, let's say ETH doubles, now I can sell some of my ETH and repay that $1,000 loan. Now I'll come back to this in a second. Let me walk you through an example of BTC. But first, some important things to note: LTD, liquidation, threshold, and health factor. It's important. This is just for how you protect yourself. It's important to monitor your LTV ratio and your health factor. Aave is built on a premise of over-collateralized loans. The loan-to-value ratio defines the maximum amount of assets that can be borrowed with a specific collateral. 0.75% would indicate for each 1 ETH deposited, 0.7 ETH could be borrowed, the maximum. The liquidation threshold is a percentage at which a position is defined as under-collateralized. For example, a liquidation threshold of 80% means that if the value rises above 80% of the collateral, the position is under-collateralized and could be liquidated. Your health factor less than 1, there's a risk of being liquidated. This can be held off by depositing more collateral to your position to improve your health factor. So in this situation, like, I would never have borrowed this much if I didn't have more collateral, because right now my health factor is pretty high, 2.28. So what I can do now is I can even go and I can even borrow more USDC, buy more ETH, and deposit that back again, right? So I could go here, I could borrow another $500, whatever, and that changes my health factor from 2.28 to 1.52. I borrow the $500, I buy $500 more of ETH, and I put the $500 of ETH back in additional collateral that will increase the health factor from 1.52 to something probably like 1.8, 1.9, 2.0, and so on and so forth. And this is what we call a loop in order for you to increase exposure without having the risk of the volatility, especially in an upward market, when you only have to repay the stable coin. So let me walk you through an example of Bitcoin, right? So let's use today's approximate price. Bitcoin price at $26,000, deposit $26,000 Bitcoin into Aave. So it's 1 Bitcoin, right? Borrow $16,380 worth of USDT against your Bitcoin. Use the USDT to buy $16,380 of Bitcoin. Important to ensure that you're comfortable with LTV ratio. In this case, it would be 63%. Now, if Bitcoin rises 300%, it does a 3x to $78,000, which I think we're all comfortable that in a bull run, that's not too far above the $69,000 all-time high. That's pretty reasonable. So this strategy is very conservative, in my opinion. If you think that Bitcoin's going to go to $150,000, that's a 6x from here, right? So this example would just be 2x of whatever we're talking about in this example. So with a 300% rise to 78,000, your collateral would be valued at $78,000, and your Bitcoin borrowed would be valued at $49,140. Sum of total collateral plus Bitcoin borrowed is $127,140. So with the $127,140 worth of BTC at a price of $78,000 per coin, you'd have approximately 1.629 Bitcoin. After repaying your USDT loan of $16,300, you have 110,760 worth of Bitcoin. This includes your collateral plus Bitcoin borrowed. Now with $110,000 worth of Bitcoin at a price of $78,000, per coin, you would have approximately 1.42 Bitcoin. So you can see in this example how, and this wasn't even using a looping method over and over, which is a bit more dangerous. It's increasing your margin in your, a little bit. But in this specific, quite conservative example, you would end up with an extra 0.42 Bitcoin. And guys, that's $420,000 at $1 million Bitcoin, right? That's huge. This is such a powerful method. Now, the one thing that I just wanted to say is make sure that you watch your LTV, you watch this health factor carefully, and make sure that you don't use all of your assets in this strategy, because if you have a flash crash, if the price goes down, you need to make sure that if you don't want to get liquidated, meaning selling your collateral at a rock bottom price, you're going to have to be in a position where you can add more collateral in case things go down, or just don't be as risky in how much you borrow. So try to keep your, if you really want to be cautious, keep your health factor at a 3 or something like that. Guys, I hope that you found this very, very interesting. I know that I use this a lot. I'm happy to answer questions. Leave me questions in the comments below if you want to know more information about exactly how I do this, what maybe I missed. Let me know if you found this valuable, and please do feel free to share this with your friends. It would mean a lot to me. Guys, I will catch you on the next one. Take it easy. See you next time. Bye-bye.